Okay, this is a re-upload of this one. I had to fix the sound on it because the sound was very bad. I figured out what was causing my sound to be lowered on the video, even though I'm talking very loud in the video. Okay, so we're talking about stock investing discussion. This is just some basic knowledges into stock investing. I always tell people to do their own research because you're your biggest advocate. There are a lot of books on this. You can start with books that Dave Ramsey has written, John Hope Bryant, and people like him. So, introduction into investment. The personal investment is to just transfer your savings to actual growth and basically beat inflation. Inflation right now is eating at people's wealth. In the past, people like very past. I'm talking about like I'm gonna say like the 60s. You can actually save up money and just pay for things. But now with inflation, you save the money up, but then as you're saving the money, you have a secret tax that is on your dollar, which is called inflation, and the government knows about it. They don't care. And this is also about long-term building. Also, investing is about long-term. This is not a quick, within 5 days, you're going to be a millionaire. That is not possible. Only a few people get lucky. Of course, they do put it all over YouTube. I made $10 million in 5 days. That's 1 in a billion people do that. And a lot of times when people do it, come to find out years later, they're arrested for fraud. Okay. Why investment matters. Like I was saying, inflation is eroding the value of your dollar. Our government is printing, and they're not going to stop. The debt's just going to keep growing until they change money. That's eventually what they're going to do. Oh, no, it's not called the United States dollar. It's the Canadian American dollar. We call it the can dollar. Yes, $10. Okay, just like they created the euro. Okay, Amero. They have talked about the Amero. It may become that. And we have to beat inflation. Inflation is a secret tax that people don't know it. You're going to pay it. You're going to pay it whether you like it or not. You're going to pay inflation tax. That's why your money. You can go to the grocery store, buy $100 of food, look at your card, and just start crying. Also, investing is about compounding magic. The magic of compounding investments over time. You put money into an investment. It's a good stock, not a meme stock, not a hype stock. It's a good stock that has growth over time, and your money can actually grow. That way, when you're older, you have something to pull from. But this, I gotta say, in life, you will always have work to do. There will always be work to be done, especially by men. You will work till you die. You will always be, even if you make $1 billion, you'll be working on your health. That will be the next thing. Now you work going to work every day about your health and something though. But this is going back on topic. People need to understand the compounding magic of investing is very important. Okay, what to review when choosing a stock? You want to look at the company fundamentals. Look at the core business. Like, what is the core business? Like Visa. The job of Visa is to transfer funds from one account to another account, and that's what they do. They're just they're the distribution hub of dollars and euros, currency, whatever the currency is, they can move it. Financial ratios. How much debt does the company have? How much profit do they have after paying for it? Risk. How much is it as risk? As of right now, with AI coming in, if you have a company, let's say that company was a coding company, they just coded up computer code. With that current AI level right now, a lot of coders are going out of business. They don't need coders no more. They still have some, but for the most part, coders that used to make $100,000 a year are now making $30,000 a year because of AI. Or instead of for having one coder having, I'm sorry, 100 coders making $100,000 a year, they have one runs it all. Okay, so you have to worry about the risk factor because stocks can plummet, companies do go out of business, but it's ways to check to see if companies are in trouble. Okay, you want to look, I kind of already touched on this. Yep, like I was saying, companies' revenue and earning, profit margin, what their debt level is. Like AMC, the theater company, it has a big debt problem since the pandemic, and they've been stuck in it for a while. Less people are going to the movies, but now they're not going because people don't have the money. But AMC has the debt level is too big for it. And if that wasn't kind of translatable, I'll say that again. AMC is a company that can be salvageable. but it has so much debt on it. That's why the stock is so low. But if they ever get rid of that debt, that stock will probably go up to $25 a share. They have a serious cash flow, and that's something you want to look at. You want to make sure a company has a positive free cash flow after paying off all its debt. If a company is heavily debted, it could be like how the movie company Paramount is buying Warner Brothers or something. Warner Brothers got too much debt, so it's either going to be Netflix or Paramount that takes over that company. So that's why you want to pay attention to the debt levels. Learn what PE means. PE is price to earning. Because a lot of stock may be valued very high, but it could be an overvalued stock. I know they say the stock is at 300, but that doesn't mean that it's actually worth 300. So that way you know when to crash. If you hear on the news, oh, this stock is at an all-time high, it's just going, it's going. And like, why is that stock? Because people just keep buying. It's off of feelings. But then eventually the feelings are going to die and that stock's going to go back to what it price it should be. So you just have to pay attention to that. Pay attention to the PE and get a better understanding of it. I've looked at it, so I have a great understanding. Is it basically the stock price matches the earnings, such as they would say like, give me a company. AT&T stock is at $1,000 per share. Everybody would know. Oh man, the PE's at 800. Oh, that's overvalued because everybody knows it shouldn't be that high because AT&T is also in competition with other companies that are doing even better than AT&T. So if their price is at 25, AT&T is at $1,000. Something's wrong here. What was it? T-Mobile. T-Mobile. Actually, they're making more profits. They got less debt. How come AT&T? Like that's going to crash. That's going to go down. That's what you mean by PE ratio. Okay, there are risk factors to consider. The market is volatile. It's like that's what I was talking about earlier. Trading psychology. There's a lot of psychology in trading. Tesla is the most psychological company out there because of the cars. People think Tesla is the cars, but Tesla also makes homes batteries, such as the power goes out. If you have one of the Tesla batteries, oh, just turn that on and okay, your house is back powered. Of course, they got the cars. You got the Cybertruck, which is ugly. But you also have the robots that he's doing. He has other things that Elon is doing. So Tesla's going to be okay. Tesla's going to be okay. But it's a lot of psychology because it's a lot of government involvement in Tesla. That's why I think at the end of the day, the company is going to be okay. It's just a lot of psychology and things going on with Tesla. So that's things you want to know. Political, that falls into the political events. Government contracts. Some companies are very lucrative in money is because they have government contracts to where they can overcharge. If they're in debt, the government will come in and give them a contract and get them out of debt. That's why they fight for government contracts. And that's why they give donations to politicians. News, pay attention to the news. A news can hype a stock up. The news can also kill a stock. News report comes out that McDonald's has come out with a new burger that actually is healthy for you and actually helps kill cancer cells. Oh, really? The new type of beef. It's a way that they cultivate the beef. They got a new system. And then so McDonald's stocks will come up, go way up. But then at the same time, if it ever came out that beef has been proven to cause colon cancer, the sale of beef is going to drop, causing McDonald's stock to drop because that's what they sell hamburgers primarily. Then you also have to worry about market bubbles such as the AI bubble. Everybody's into AI. AI is in everything. And some of these companies aren't profitable, but they're pumping money to it. So eventually, when the bubble pops, now all these companies are not going to go out of business, but half will be gone because they're going to be winners and losers in the bubble. So you got to try to figure out which stock is in that bubble. Who's going to win, who's going to fast. And I say the biggest thing, especially with the AI bubble, look at the companies. Okay, if AI was to crash, what else can they do? Like IBM. Oh, IBM, they're going to be fine. The AI crash, okay, they go back to doing what they've been doing. Tesla, go back to doing what they're doing. But if that company's sole thing is AI, then that company can't crash unless they have a government contract. If they have a government contract, then they'll be one of the winners at the end of the day. This is something I get talked because a lot of people think I'm a day trader. Day trader means trading by day. That means every day you're buying, with an hour you're selling. You're trying to win on the percentage of the trading of the day, which is usually about 1 to 2%. and you're trying to gain that. Long-term trading is like buying a stock and then looking at it. Okay, what is the projection in the next 6 months? I say with every stock, you got to look at the projection for 6 months out. 6 months, where do you see the stock? You want to go check the history of the stock and then go from there. But day trading is very dangerous. Most people lose money on it, but you got to be into the long-term trading. Long-term trading only. Okay, so yeah, talking about day trading, what I was saying, you got same day transaction, technical files, high risk, high stress on it because you're just hoping that it goes up. Taxes, short-term capital gains tax, ordinary, often 30 to 40% versus 15 to 20% for long-term. That means if you made money that day versus you profited 6 months, the government's going to charge you 30 to 40% of your profits. Yes, the government will charge you 30 to 40% of your profits, but if you make money, I need to learn that, what the difference between, I know that's daily, but let's say if it's 6 months later, I think it will be 15 to 20%. It's always stuff to learn on this. Okay, also day trading is a full-time commitment. From when the market opens, when you close, you got to be watching the market just to see where it is. You're constantly checking your phone. Where's it at? 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 And currently, right now, I would stay far away from day trading. The market's too volatile. It's crazy right now. Okay, now with long-term investing, you got multi-year horizon. I said 6 months, but you can go out 2, 3 years, 6 years with the stock that you buy. Give an example, JP Morgan. I'm always talking about JP Morgan. The past 5 years, the total percentage of gains is 150%. That's over the 5 years. It had its ups and downs, but from 5 years ago, it's up 150%. That's darn good. JP Morgan's done good over the past 5 years. But within that 5 years, it did have its bad years, its good years, but then it recovered so good that it's at 150%. This year, it's actually done very well as well. Long-term trade investing is the best. Dave Ramsey talks about it. Warren Buffett talks about it. John Hope Bryant talks about it. Basically, you talk to wealthy people, they'll talk about it. And it's also less stressful and less taxes because you don't pay taxes on stocks until you sell and profit from them. That's why Elon Musk and a lot of billionaires pay less tax. And it's also been a proven success where long-term has been a proven success. And it's also wealth building and wealth maintaining through proper investments. Okay, so you may be thinking, okay, how do I know what stock to do? Well, first you want to stay away from avoiding meme and hype stocks. GameStop. Basically, GameStop is really what got me into learning about investing because I won money and I lost money in GameStop. I should have sold it all, but I actually did learn. I lost money, but I got educated. That's what really pulled me in, like GameStop. Like, man, this is crazy. Oh yeah, and then it all crashed. Okay, so meme stocks are social media driven where people are just hyping up, it's going to the moon, but why is it going to the moon? I don't know, just buy. You see that person made money, just buy, buy, buy. That's why I call it a meme. It's a hype stock, been going on for years. Because the price can swing often. It can go way up, but then it can drop 50% or more in a day. And that's where the valuation of a stock has no relationship to the earning revenue or rational analyst. And that goes back to the PE of the stock. This is where I was talking about PE on the stock. Then also you got to watch out for pump and dump risk. Some companies know they're finna kill a company, and what they'll do is the company itself will buy the stock, pushing the stock way up, or they'll have some of their friends do it. People think, oh, the company's coming back, they buy into the stock, they sell out the stock, cash out, kill it. You're left holding with a stock that was trading for $300, now is trading for $1 a share. Hertz, the old Hertz. Oh, GameStop. Yes, GameStop. Okay. Okay, so when it comes to stocks, you can do single stocks trading through like E-Trade or index funds, which you can do through E-Trade away. That's just like a group of stocks put together. Single stocks has pros and cons. It has a higher potential upside if a single stock goes up, then it's great. You know exactly what company it is you have to monitor, so directly with that company. The only thing is all your money invested will be into that company. So if that company fails, so does the stock, so does your money. But I'll go a little bit more in depth. But then also you have to worry about the emotional challenges because anybody that gets into stocks, you can't help but see what the market did for the day. You just can't help it. You just want to see how it did. And I suggest you should be tracking it. Even if you have a broker, still track, see how it's doing every day. Just every day, just watch it. Just watch it. But don't get emotional. Like you had one bad day, sell it all. No, we don't sell at losses. Okay. So how do I pick my stocks? I basically deal with the S&P 500. If a stock is not in the S&P 500, I don't deal with it. S&P 500 companies have to be considered companies that are doing very good. And I don't even go to like the bottom 500. It's usually companies that are in like the top 50 S&P 500 companies. They're like one listed as the top, such as JP Morgan, Visa, MasterCard, those stocks. But just remember, just look at S&P 500, get the list of it. AI can actually help you that. What stocks are currently in the S&P 500? Okay, now separate from lost my train of thought. Okay, so separate from single stocks, you have your growth funds. You have Vanguard Growth Index Funds, Vanguard S&P 500 EFTs. I would suggest you do those. Those are pretty good. Like VGAS with Vanguard, those are group of stocks put together, so it lessens the risk because if one company fails, the other companies are doing good. It can help keep a stock going. I recommend VU, Vanguard S&P 500 EFT, or Vanguard Growth Index. There's other indexes like that, but just look at them and just look what it'll take a moment once you look at what companies are in that stock, in that ETF or that growth index fund. And this is a long term. Just put the money in it. I'll see it in 5 years. I wouldn't even wait 6 months on this. And these, I'll look at it in 5 years. Just throw your money and look at it in 5 years. Yeah, but also with these, when I would watch tech heavy, tech is very swinging. Banking is more, in most cases, unless we have a crash like this in crash that happened in 2008, you're pretty good. But just know what stocks are in those growth funds. And like I said earlier, I use E-Trade. It's a good platform. This is not sponsored by E-Trade, but it's just actually what I really use. E-Trade doesn't make it very easy to transfer money. And if you make a mistake, let's say if you transfer money, they will work with you and they will also remind you, hey, you transferred this much money? Uh-oh. They'll check it because they have to make sure that it clears, just in case you made a mistake. You were only supposed to put 500, you put 5,000 in a trade. Like, I don't have that. So E-Trade will actually help you with that. So in closing, the main goal of investing, hold up, slideshow. Okay, the main goal for investing is just to build wealth, but also to maintain your money, beat inflation. That's what got me into investing. I needed to beat inflation. But you need to focus on the fundamentals. Look at financial analysts, business quality, competitive advantages rather than emotional or headlines. Avoid hype, think long term, and let compounding work. And just take a moment, type in Google financing, and it has a list of stocks there that you can look at. Google Finance. Look at that. There's other places too, but just go to Google Finance and it can show you. This is just some key takeaways to look at. You want to be diversified. All right. Thank you. One thing I'm gonna just actually show. It's just on Google Finance. Give me 1 second here. I'm gonna show you exactly what I'm talking about with Google Finance. Okay, so yeah, this is an example of Google Finance to where you can look at stocks and stuff like that. You can create your own watch list. This is stocks that you just want to look at. As you can see, it gives good reports of like where stocks is and things that you want to look at. For example, like I talk about JP Morgan is on here. Got insurance stocks. Got SoFi, which SoFi is doing pretty good. But this is an example. You can come here, look at JP Morgan, So you see where it's currently going day, for 5 days, for a month, but I always start out here about 5 year plan. You see how it's going up? Oh, it's at 160. That was like 221, but then it went down. It's at 111. Then it started to slowly go up. Then it goes up, up. All right, we're making money. And then on this date here, February 7, 2025, then boom, it crashed for some reason. Oh, but then it came back, and then it came back, and it's still going. And that's JP Morgan. That's all you look at. And if you scroll down on it, PE ratio, dividend yields, and we got AI. This is something, and it'll tell you too on your little notes, but you also can type this into ChatGPT, and it'll tell you what all this stuff means, market cap, what all this means, and it'll give you a good breakdown. Also, one thing you want to look at, this right here, quarterly reports. They also have annual reports, so you can see how good the company's doing. They put it all out here for you to see. You just got to take the time to review it. But yeah, that's basically what investing is, just putting your money somewhere. And the reason why I like doing stocks, because some people tell me I should go into housing, but I like stocks better because I can control it. And if I needed to sell, E-Trade, sell it all for money. You know, take a loss, but you know how loss, you ain't got to worry about, oh man, I got to get somebody to see the house, I got to find a buyer. No, just sell it back to the market. They'll take it back. All right, thank you.